What's up, traders? Andrew O'Connell here with Pristine Capital. Welcome to your market recap video. It is October 10th of 2022. We had a pretty extreme day of geopolitical events and Fed headlines. Let's dive into the price action. We had the S&P 500 finish down 0.76% today. We had the NASDAQ QQQ finish down 1%. We had IWM small caps finish down 0.56%. Our dogs, the Dow, they lagged to the downside. They were only down 0.34%, and our ARK Innovation ETF was down 3.28%. The bond market was closed for today, but you can see TLT fell pretty drastically, and we also saw the Treasury futures for U.S. bonds. They were dropping significantly as well. So no let up in sight on that front. And I think what's going on is originally this bond market weakness, it was related to inflation's moving higher, so bond yields have to move higher. I think now we're in a spot where it's just literally financial stability weakness. We have players that they're just massively short dollars. Everyone's trying to raise dollar liquidity. U.S. Treasuries happen to be one of the most liquid markets in the world. So in order to raise dollars, people are selling their treasuries. And I think this is really just a big liquidity event that is going on in the market. Pretty much all of these indices, they did close towards the lower third of their day's range, but we did have quite a variety. We had some big bounces intraday. We had what looked like a capitulation low for the S&P 500. So just a lot of intraday volatility. The volatility indices, they did finish higher on the session, despite the moves in most of these indices being a lot smaller than the daily implied move. You can see small caps, we had 43% advancers, up volume was 25.4%, and the trend model remains at a -3. For today's economic data, we did have Fed Speaker Evans and Brainerd, and I must say they definitely had a change of tone. You can see this one soundbite from Evans: we need to be mindful of financial market stability. Up until now, all these Fed speakers, they were pretty much just talking about inflation. We need to tighten. It's all about inflation. Now, as things are clearly starting to break within the financial system, case in point, the UK bond market, and their central bank had to step in. For us as well, our treasuries are just selling off every single day. This has become more abnormal. A sell-off in treasuries is normal, but it's supposed to be a risk-free asset. We don't want to see treasuries declining by 50% off their highs or something of that nature. That's where you have financial stability concerns. So I know everyone's looking at this in such a binary way. Either the Fed is tightening up to the gills, or they're just flooding the market with liquidity, a Fed pivot, whatever. And I think it's a lot more of a continuum than just a yes or no thing. I think we are seeing today that these Fed speakers, it's not they pivoted, but they are changing their stance to slightly more dovish. They're letting everyone know, hey, we kind of understand that things are kind of breaking the financial system. We want to continue to tighten, but if things get worse, we will have to pivot. And then we also had some major escalation with the Ukraine and Russia conflict over the weekend that ended up spilling into today's session. And we had cyber attacks reported at some major U.S. airports. And the origination of those attacks is believed to be Russia. So things are really just heating up on that geopolitical front as well. In terms of tomorrow's data, we are going to have consumer inflation expectations that's coming out at 11 a.m. And then we do have another few Fed speakers as well. We have Harker as well as Mester. So let's see if they also mention financial stability tomorrow. VIX Futures, they remain inverted. So we do not have the all clear that we're out of this volatility event. For right now, we are stuck in the blender. Finviz Heat Map, you can see this is better than Friday, we'll put it that way, but still not good by any means. Luckily, we did have a sell-off in energy today. But then you can see semiconductors just continue to sell off of that news that the United States is going to be banning some of the exports to China. Microsoft, it just seems like there's a FANG stock pretty much every day that just falls out of bed. Today was Microsoft's turn. And other than that, it was a pretty mixed tape. In terms of sectors, In our top momentum slot, we still have the MSOS cannabis ETF, but it did have a pretty large decline today, down 6.86%. In terms of relative strength, we did see aerospace and defense was our top performer. That is not what we want to see. That could be signaling, further escalation on the geopolitical front. That's, not a good thing. And then we also had industrials that were bid, perhaps for the same reason. And we had consumer staples that were bid as well. Style factors, all these closed in the red. We had the momentum style factor down 0.54%. The high beta style factor got crushed. It was down 2.25%. And then we had no trades on the option side, no trades on the stock side. I mean, I do have a cash buffer, but there was nothing really to spend it on today. It's really just like, too uncertain. There's really nothing showing relative strength at this point. There are a few names, but yeah, it's nothing is really jumping off the page. We'll put it that way. So let's take a look at the VIX. The VIX is up, or was up 3.48%. Good that this did not close on the highs. Good that we got a red candle in the VIX. There was a headline today in the afternoon, and Russia apparently said they want diplomacy, which who knows if there's any merit to that, if anything will come of that. But the VIX ended up closing lower. The TDEX, which is the measure of tail risk, also closed lower by 6%, which is good. But the dollar wrecking ball, this thing has been up for 4 straight sessions, team. So it looked like things were getting better. We had what appeared to be the start of a breakdown in the dollar. And then lo and behold, here we are just zipping right back up to the upside. So the real question is, do we make new highs? Do we not? And this is just poor management, like for the Federal Reserve. Like when they say, hey, we are getting concerned about financial stability, this is what they mean. Like they're tightening us into a recession. They're tightening us into a geopolitical conflict. And, let's just push everyone into recession right before we have this big showdown with Russia. That's awesome. So yeah, dollar index heading down would be the optimal happy path, but we can't rule out this upside move in the dollar is over. So it puts us in a pretty difficult spot. These treasury futures, take a look at the ZN futures contract. This thing finished in the red. We had a bounce, but we've pretty much given back almost the entire bounce. We did close off the lows, which I guess we can look at is glass half full. And then take a look at these 30-year treasury futures. These also, they actually made a new closing low today. So yeah, it's not good. Like what we're seeing here, this is becoming like not normal anymore. It's not just like, oh yeah, the bonds are re-rating a little bit. This is just like everyone's just, dumping out of their treasuries. Crude oil, this did end up closing lower on the session, which is good. This was another thing that was really working against the market. We just had crude off the lows just zip up. What is this, like a 20% gain, 25% gain in just like 2 weeks? It's pretty crazy stuff. And we finally saw some selling there. Now let's take a look at the equity indices, just kind of see where we are at. The S&P 500 was really slipping into the abyss there. And we closed off the lows, which is good. At the end of the day, this is pretty close to a doji candle, although it is a red candle. And this puts us in a very interesting spot for when we get the inflation data on Wednesday and Thursday. We're going to have CPI as well as PPI. I believe it is PPI on Wednesday, CPI on Thursday, if I'm not mistaken. I'll have to double check that. But those are going to be big market moving events. So basically we had this 2-day bounce, and over the following 1, 2, 3, 4 trading sessions, we have given back almost the entirety of that bounce. We are still positive from that point, from I believe this was like Friday the 30th. But yeah, this is pretty brutal in that we had 2 days just zipping to the upside and then giving almost all of it back. Let's take a look at the NASDAQ. NASDAQ actually made a new closing low for today. We have this VPOC right down here at around 10,563 for the NASDAQ. Russell 2000 has been showing some relative strength. You can see the Russell 2000 made a slightly higher low, but still 4-day pullback here. Not really the best looking chart. Dow Jones doing something similar. We did put in a higher low, which is good. And then our ARK Innovation ETF really just got the brunt of it today. ARK Innovation ETF did this one make new lows. It did from maybe like a week or two ago, but we still have not retested the May lows. And then we also made a higher low in June. So that's really what I'm going to be looking for. Do we make a third higher low, or do we retest and or undercut some of these levels? One of the only stocks that looks pretty good here, I do have a position in Wolf. This one, we undercut the 50-day SMA. We undercut the monthly value area low. And we ended up putting in a hammer candle. Not too bad. If we do end up getting a bounce or a rally in the market, I know at this point it seems like there's no way we could ever get one. But if we do, this is definitely a good name to have on the watch list. So heading into tomorrow, obviously going to be watching the dollar. Going to be watching treasuries now that the U.S. bond market is going to be open for business again. But tomorrow is all about seeing how investors want to be positioned for the incoming inflation data. Hope you all enjoy the rest of your evening. We will see you all tomorrow.